The market is extremely volatile right now. Stocks are selling off, precious metals are fluctuating hard, and the uncertainty around the US interest rates is growing with a new Fed chair candidate who favors a tighter monetary policy. As Powell's leadership is near its end, a huge question arises. What's the Fed's real plan for interest rates? And where could the volatile market head next? This week's Nonfarm Payrolls report could provide the answers. The report will be released on 11 February at 4:30 p.m. GMT+3. Stay with me as I break down what the data could mean for markets and how to trade around it. Before I break down the upcoming jobs report, make sure you subscribe to our channel and turn on notifications so you don't miss out on any market updates and insights. Looking back at last month's NFP release, December showed mixed job figures with the non-farm payrolls adding 50,000 new jobs. The job growth slightly missed the market forecast, but the unemployment rate ticked down from 4.6% to 4.4%. The wage growth, on the other hand, also exceeded the market expectations, with average hourly earnings increasing by 0.3% month over month and 3.8% year over year. The US dollar and gold prices were supported by the mixed NFP. On the other hand, oil prices were boosted by the geopolitical developments, while three major US stock indices all edged higher following the NFP report. To trade around the NFP release, you've got to watch the forecast numbers. Comparing these forecasts to the actual data gives you a clear picture of where Forex, commodities, and stocks could move. January NFP is expected to show 70,000 new jobs, while the unemployment rate is projected to remain at 4.4%. Wage growth, however, is expected to weaken slightly, with average hourly earnings rising 0.3% month-on-month and about 3.6% year-on-year. So how could the market react to the NFP report? And what should traders watch out for as volatility kicks in? In a moment, I'll break down three key assets: the dollar index, gold, and S&P 500. So stick around for the full technical analysis. Let's start with the US dollar index. The DXY has recently rebounded from a lower level. If the NFP report meets or exceeds market expectations, the dollar could strengthen and rebound to mid-98 levels, with resistance at 98.46 and 98.91. Conversely, a softer report would likely weaken the dollar, pulling the index towards support at 97.07 and 96.49. Now let's look at gold. Gold has been trending higher amid recent geopolitical developments and ongoing rate cut expectations. A weaker than expected NFP print could extend the rally, pushing prices toward the resistance zone between $5,283 and $5,422. On the flip side, a stronger reading could pressure gold, pulling it back toward $4,540 and $4,401. And now, the S&P 500 index. The US stock index is trading in a range as the market waits for the jobs report. If the NFP report comes in stronger than expected, the index could edge higher towards 7,018 or 7,050. However, a weaker reading may drag the index lower, targeting 6,843 or 6,802. That's the full breakdown. Remember, this is just my perspective on the market and not financial advice. If you find this useful, let me know in the comments. Hit the like button, share it with someone who needs to see it. And don't forget to subscribe with notifications on so you don't miss the next market updates.